This is the MTPredictor weekly market update for December 16th. So we're halfway through the month here, the last month of the year, heading into the end of the year, and it's been a pretty bumpy ride here this last quarter anyway. So we'll look at here the daily chart, the S&P, the new contract, and you see back in June we made the low there where our major buy signal was, and we've rallied up here to the high in September, middle of September. We fell off here again. If we look at the pattern, we had a nice five-wave pattern down here, and the tendency is that the market will correct back to this wave for what we call decision point. So just take my decision point tool here, click on the wave 4 swing high, and that gives us our target area for the correction here. All right, right around that, again, that 1440 area. And you can see we've kind of moved up there nicely. We had some weakness at the end of last week and had this pullback here. Now we're heading into options expiration week. It's quadruple witching on Friday. The tendency is about 70% of the time the market does rally into options expiration week. So if they're going to do that and get into this target area, then this is probably the week to do it. Again, I was anticipating this area we'd see by Christmas. We'll see. If they can't take it up higher in options expiration, then we'll take a look here at the weekly chart in a second and see why, you know, the top may be in and some different scenarios here. News this week. Again, we got the Fed meeting out of the way last week. We do have the housing numbers on Wednesday, job numbers on Thursday, and then GDP also on Thursday, and then some news also will be out on Friday, including consumer sentiment. So kind of heavy mid to late week with the news into again options expiration. We'll see how things go, and of course we've got, according to some of the top aides to the top senators, 50-50 chance of going over this fiscal cliff without any resolution. That's obviously going to be market's going to see that stuff day to day and react. So be aware of that. But again, keep an eye on that 1440 area. If it does get up into that area, the market is going to need, we call it decision point, because the market's going to need to make a decision there. If this area ends up holding as resistance, then the trend here, which was down, should continue down. If they can take this area out to the upside, then the tendency is they will wipe out this whole five-wave pattern down. We can take a decision point off of the top there, and the next target above the current wave 4 DP would be this one here, and that would sit right around 1460, 67 looks like. So 1440 and then 67 if this area gives way. Now if we look at the weekly chart, even though again the weekly chart we had this major top pattern here, five-wave pattern up, again we can say typically the correction would be back to the wave 4 DP. So we take our decision point tool, right, put us down just above 1200 in the current S&P contract. That's the March contract. All right, let me just clear this off for a second. So this being a major top potentially here, this could potentially be a new trend in the opposite direction, a wave 1 if you will, and this first correction to that impulse move down, we put the Elliott wave, you can see we're already in this wave 2 or B, and this potentially could be wave 2, this area, since this could potentially be wave 1. It could be an ABC, but because if this is a major top, wave 5, we could look at this as wave 1, wave 2. Let's project wave 3 down. Start at the major high here, down to the bottom of 1, up to 2, and that would put our typical wave 3 target down around 1238 in the ES here. So we have a red seller's candle. This is telling us that the sellers are now overcoming the buyers in this wave 2 or B resistance area. And so we could be headed wave 3 down right from here. In other words, the top could be in. We've gone wave 1, wave 2, and we're heading wave 3 down right from here. The other scenario, and so saying that, again, if you're in anything that's geared to make money when the market goes up, and only when the market goes up, you know, your 401ks, your pensions, retirement plans, whatever the case may be, or just your stock portfolio in general, it's again time to take steps to protect yourself on the downside there, whatever your strategy might be, whether it just be putting in stop orders or buying puts as insurance, you know, whatever your strategy is, you know, time to take action now. And then we'll see how this plays out. The other option is we could, this could end up unfolding as an ABC, so we could have a move down here and then one last move back up. In other words, form an ABC correction without taking out this high. That would still be in this wave 2 area. In fact, that would be even a more, you know, as Elliott said, the best time, you know, to be a buyer or seller in this case would be to wait for the major top, let the impulse move down, form, and then the first ABC correction to that impulse move down, and then play for the wave 3 down. It's what we call our Holy Grail trade setup. We don't have that yet, but if we do, this does unfold as an ABC correction. In other words, if we get a move down here and then another move back to the upside without taking out this high here, we technically could have an ABC, our first ABC correction, and then the big move down. So a couple scenarios, and again, we could still go on this pullback here. We could still go a little higher into that 1440 area where the daily wave 4 decision point is, and then move straight down from there, or we could you know, form that ABC type correction and then head down. If they, you know, continue to head straight up and take this out, then, you know, we've got to start over. We'll look for obviously our next resistance on the weekly chart is going to be up here. That'll be the decision point off of the wave 5, and that's around 1477, 78 area. All right, so but at this point, like I said, we could go, you know, straight down from here, like we did, projected the wave 3 down, and or we could get a little bit of a correction, another move up, which would give us an A, B, C, and then the move into wave 3, or again, we could take out that decision point on the daily chart and head for the next levels of resistance and potentially take out the wave 5 swing high there. So setting all this up, because this may be my last weekly market update for the end of the year, so we'll be heading on vacation starting this coming week here in the middle of the week, and I'll still be responding to emails and so forth, but as far as the weekly updates in our trading room, we'll be closed after Monday. So I want to get a lot of this stuff in tonight. Let's just take a look then at some of the other stuff going on here. Here's oil, and again, this is the weekly chart of oil, and you can see oil has been, you know, pinned in this. Just going to put a couple lines on here. Right around in this 80 to $110 area, you can see that it's kind of channeling in. When it got outside that $110 area, up to 120, it immediately got smacked back down, all the way back down to that $80 level, your $80 level, your $80 level. All right, we had a TS1 buy signal here. It's not a standard trade setup because our STF is red, telling us the larger degree trend is down here. But these are coming off, you know, basically a double, triple bottom here. Could be considered significant support, and therefore you could have attempted that. You know, some of our traders may have attempted that based on that fact. And since the 100% initial risk line was achieved, a stop would have been moved to break even, and you'd be stopped out with a break even trade at that point. You see the target was right around $100. So my thoughts on it were, it could move from here as it did, you know, back here we didn't quite get down to the $80 level before it rallied back to the 110 plus there. But I was kind of skeptical of this trade setup. I'm thinking maybe we're going to test that $80 level in oil, and that might be a good opportunity there. We'll have to see if this area continues to hold as support. Maybe a little better buying opportunity there. We'll see what sets up at that point. So that's oil. Let's take a look at our dollar index. Alright, so again, the dollar index, we had a significant buy signal back here with that high volume spike telling us that professionals were stepping in and buying. The dollar has not reached the target yet. They're at 85.41. Did come down into this support area here. That's the decision point here off of the swing low here. Came in, found that support, rallied a bit, and you see it's fallen back off here. Got a little bit of support in this wave B area, and we can project up wave C here and see where that comes in. Okay, so minimum wave C right around 81.50. If this support holds, we should get a rally into that. If we look at the and ultimately, this target is still out there. So we'll see. This was the last swing into the low here, and that's why we take that decision point off of this level. And that's the software also knows that's the target for this particular trade setup. But this is a significant swing high here in that it's the last swing into this low. So we typically expect that they would achieve this target. But if we look at the euro, again, the euro here, if I put the Elliott wave on, we had a 5-wave pattern down. So again, just as we were looking at the S&P and the other markets, we expect a correction back to the wave for DP. So here was the first leg, got a little pullback. Again, markets don't unfold in straight lines, as you can see. Nothing typically goes straight to a target, but it's picked up some steam again. Hasn't been able to take out this swing high yet, but we'll see if it does finish off. Obviously, if it can reach the wave 4 target, the US dollar will be selling off. If it is able to achieve this, again, we call it a decision point because the euro will need to make a major decision here. If this holds as resistance, then the trend which was down prior should continue down, and that's when we'd see the dollar resume its rally. If they can take this, euro can take this out to the upside, then we can look at the here's the top of wave 1 and this particular move down, take our decision point, and again, this would be the target if they're able to take the wave 4 DP out. If they take this out to the upside, then this would be the next target around 147.0, 147.0. I'll call it 147.20. Okay, and let's look at gold and silver here. It's more data to the chart. New contract here. So let's just pull up the continuous contract of gold here, and I'm going to go to the daily chart here. So gold got a pretty good pullback here. Here was that last buy setup that came in here. And you can see it's come back, pulled all the way back to the break-even point here at the 1686. And so that long, if you didn't take profits, then stopped out at break-even there. This got, this I think is a lot to do with people selling this, tax purpose, because of the uncertainty of what's going to happen with the tax picture next year. and I think that's kind of what thwarted a lot of this, or this potentially it was a nice setup here. But if we look at silver, and silver you can see was less affected, and that's why I think this had more to do with kind of tax selling. You can see silver's in a lot better shape, and I think it didn't get quite hit as hard, which is kind of unusual because silver is known for being, you know, much more volatile, smaller market, and you know, 30% correction is definitely not unheard of in silver. So this has held up better. You could still be in this particular trade with a stop at break even here, or 31. We'll call it 31.35 anyway, where the entry was. We'll see how this finishes out. Like I said, it's going to be a bumpy ride with this stuff that's happening into the end of the year here, and so expect that. But we'll see. We got a couple of high volume spikes coming in here. We'll see if it's anything to do with professionals. Don't have any confirmation of it yet. That might be coming in and in buying in here. We'll see if we get a blue buyer's candle to form. If these lows hold, then they may be ready to make one more ascension up there. Here's a little ABC correction. We'll see if this support area holds. Again, get that blue buyer's candle on Monday to form, and then maybe that tells us they're going to at least test this area back up in around 34, just above 34 in silver. So anyway, we'll leave it there. If I don't send another weekly market update before the end of the year, well, I'll send one before January 1st anyway, to kind of set the stage for the new year and what's going on. Should have a little better idea what's going to happen with the fiscal cliff and all this stuff that's going on here. So let's see if they can have one more rally in the stock market into options expiration this week, and if so, you know, we'll look at that weekly wave 2. We'll see if how that's going to form. And again, if you're long the stock market in any way, shape, or form, it's again time to protect yourself for potential. The risk to the downside is much higher now. So we'll leave it there, and we'll see you at least back by the new year. Take care. Have a great rest of your trading week and the rest of the trading month.